So now we're going to talk about the first year slash the first time that your escrow adjusts and what to expect. We're going to go over when you're going to see the adjustment, usually per year, um, the taxes adjusting and when it correlates, your insurance adjusting, and the outcome of an increase or a decrease. So primarily, when your taxes are going to be paid at the end of the year, and this is going to be particular to every county, but most likely the taxes are going to be out probably sometime late October, due by December. So when that time rolls around after you purchase, now the example that we've been using is you purchasing a property in July. So you've got August, September, October, November, and December. So 5 months later, your tax bill is due. So once your tax bill is due, your escrow account is gonna, it's gonna be used by the bank that's managing your the servicing. And what they're gonna do is they're gonna write checks to cover all your taxes at that time. Now remember, because you closed in July, they're not gonna write a check for your insurance until July of next year. So that first adjustment. So let's say hypothetically you buy the property in January, or you bought it in November. When you typically see an escrow account adjustment and calculation is going to be in the beginning part of the year. The banks will typically do this around February, and then we'll send you out an adjustment statement showing you the net result somewhere by March or April, more or less. So now you're going to have to worry about maybe an adjustment happening. If your taxes and insurance are both paid for by the time the statement's out, then you know what your adjustment is going to look like for the whole year. If not, you're going to only see what's going to adjust at that period of time. So what will typically happen is, let's say it's a normal year. When the tax bill comes out, you're going to get a copy of it in advance. It's going to be mailed to your property or whatever mailing address you've got set up, and it's going to explain to you what the bill is supposed to be for and how they came up with that calculation. It's important to read it thoroughly and understand from year to year how the county is looking at your property tax, because if there's a mistake or if something happens, you need to be able to be aware of it before the bill is due or before the mortgage company attempts to pay it. And this way you can adjust any problems and manage them in advance. Now, what will happen with taxes is, and I know this is true for Harris County, somewhere around April or May, you're going to get a letter from the county that they're telling you what they think your property is going to assessed for in that particular year. And they're going to do it based on their own matrices and what they think houses are selling for in the community. And so the important thing to realize is the county assesses value for properties differently than an appraiser would. So if you have experience by selling or buying and selling properties, and whether you're an investor, you bought properties to sell or that you lived in, or you're a realtor that does business in the market, we typically will look at value of a property based on what's currently happening in the market. And the more current, the more accurate, right? So most appraisers will try to look at what's happening in the market when they assess the value of a property within the past 3 months. But the county doesn't work like that. The county will actually look at values going back for 2 years. Why that's important to realize is we need to know how our market is trending overall. So let's say I buy a property and and at the time I buy it, the real estate values are low comparatively as they've been in the last 2 years. It's likely that the county is going to want to overtax me because they're going to be looking at valuation over the last 2 years, not necessarily when I bought the property. And that's going to affect their decision as to how they assess my value for the year that I'm going in. Typically, what the county is supposed to do is, if you buy a property within the past year or within a year of the tax bill coming out, and they assess for that future year, whatever you paid for the property is supposed to be an establishment of value, which is important because sometimes you're going to pay for the property less than what they think it's worth from the prior owner, or sometimes you'll be paying more. So if I'm hypothetically buying a property for, let's say, $300,000, and the previous owner just never was taxed for more than $220 because they had a homestead exemption that kept it from being assessed higher and higher, and even the county, let's say, didn't assess the market value as high, it's very possible that my expectations from that previous bill when I set up my escrow account aren't going to be realistic because the county is going to tax me at the purchase price that I paid as the market value within the first year times the tax percentages less my exemptions, which is also why it's very important to file for your homestead exemption if you're getting one immediately when you buy. Sometimes people forget, and one of the rules, like in Harris County, is that they can only go back for 2 years. And I've seen people that have just 5, 6 years down the road and they just never paid attention. They just kept paying their escrow shortages. And whenever they catch on to it, they can only go back for 2 years and have the county issue them a refund. So it's really important to pay attention to your taxes and understand how they affect your escrow account, because you want to make sure that the numbers are accurate every year and to be able to protest. The county has mechanisms in place where you can protest the value for any reason. Your condition may be different than they're thinking. You may know of other values out there of other properties that are selling that are less. Ideally, everybody wants to negotiate with the county in order to, make them believe that the house is worth less for tax purposes. And of course, when they're selling the property, they want to, sell it for market value. So it is important, because if you don't pay attention to the bill that comes in at the end of the year, and if you're not paying attention to the letter that comes in the early part of the year for how much the county believes your house is worth for that particular year, you're going to miss your opportunities to dispute what they believe the property is worth, which is part of maintaining. And we'll go into that in more detail in the next slide. But it's very important to keep an eye out on those bills. And I had an intro video to this class where I did talk about one of my previous buyers who ran into a problem because he didn't pay attention to the bill that came in the mail, and the county had made a mistake by taxing him for 3 houses that were on a piece of land that the developer built, simply because when the developer subdivided the land, he didn't go back and establish individual tax accounts for each lot. So the county just made the mistake of just assuming they were all part of, belong to one owner, and just taxed everybody for one bill. So that's why, had he caught it hypothetically in advance, he would have had plenty of time to address the issue before the bill came due and before he actually had to, his mortgage company had to pay it. So also for your insurance, when it adjusts, let's say we already had our first adjustment for 1 year, and then the insurance comes in and we're not paying attention to it, and we're being, insured. The insurance now costs more than it did when we bought the property, and that happens at times. You're gonna have an increase in your insurance, and you may want to go back and shop it again. So what typically is going to happen is a month before your renewal. Let's say hypothetically our house here, we bought it in July. In June, you should be getting a renewal notice from your insurance company that's going to tell you how much they're going to charge you to renew your insurance going forward. And when that happens, we need to take a look and make sure it's the same or less than what we had paid before. Because within that month, if we don't like the price that they're charging us, we can go back out in the market, find new insurance, and then have the new agent communicate with the mortgage company to be able to renew their new policy, instead of even catching it a couple months later and then having to rebate one policy and pay the other. So catching it in advance, that's the most important key. And so what is the outcome of an overall increase or decrease? So let's say the taxes come in higher and or the insurance comes in higher than what's typically expected. What will happen is the mortgage company will typically pay out the shortage, and we'll come back to you and give you a couple of options. The first option is you pay the shortage off and you're square with them, and then they're going to increase your escrow payment in order to make sure you're not short the next year, anticipating that your bill will stay the same. So in that situation, your payment only goes up by the marginal difference. But let's say you're in a position where you really can't pay the shortage. Let's say that shortage is $2,000 or $3,000. If you can't pay it, they're going to give you the option where you can pay it back over the next year. But what's going to happen is your escrow payment is going to go up twofold. Once to cover the shortage, so next year you're not short again, and once to pay them back in 12 months for the shortage that they paid out in its place. So which is really important to kind of pay attention to, because that's what we really want to avoid. We don't want to get in a position where our escrow account is going to be overcharged or inaccurate for the next whole year as we struggle to make adjustments and do things after the fact. It can become stressful. And in fact, the number one reason people who lose their homes actually lose them is because their escrow accounts adjust and their overall payment becomes unaffordable. So it's really something that I really recommend for anybody to watch out for as you're setting it up, as you own the property, and even when you sell, because the timing of when you sell is going to make a difference as to how much money you're going to clear to either buy your next property or to do your next endeavor. So let's say a decrease happens. So hypothetically, let's say the taxes come in cheaper, or the insurance comes in cheaper. I've seen it at times where the county carries over someone's exemption over the end of that whole year, and then for the next year they start you out with your exemptions. And in that case, what's going to happen is you're going to have a shortage. I'm sorry, you're going to have a surplus. But this can be tricky because that surplus can be a future shortage. So let's say and I've seen this happen before. Let's say you buy a house from somebody who had an over 65 exemption, and we over collected taxes because we were anticipating on paying the whole bill at your expense, at your tax exemption level only. And hypothetically, the county just says, "Oh, they tax the whole year as though it was over 65," and it's happened, right? Well, we've seen this happen before. Now your mortgage company pays the bill and says, "Wow, the taxes are really a lot cheaper than we thought. And now we have all this extra escrow money. What are we going to do with it?" Well, by law, a mortgage company is not allowed to keep an extra amount of money in your escrow account. They actually have to cut you a check for the difference. And they may even reduce your payment. So next year, your escrow account is not over again. So let's say that hypothetical happens and you now get cut a check for $2,000, $2,500, and your payment drops and you're happy. So then you go into the next year paying a lesser amount into your escrow. And then when that future bill is due, because what's going to happen is the county will then in the future tax you. It's just that the tail end of that first year that they may have kept the exemption that really didn't belong to you. And of course, nobody says anything if they're getting back money. So now that next year, at the end of it, the tax bill comes due. And when it does, it's for the regular amount of taxes that you're supposed to have. Well, then now you're short. Now the mortgage company comes in, adjusts your payment to be correct going forward, and it actually has you recover the difference. So now you're going to be short down the road. And if you're not expecting it, so sometimes I talk to my buyers and I explain to them what they could expect for which year. And if they're expecting it, okay, it's not a big deal. But if you're not expecting it, you think your payment has dropped and maybe you go get into other responsibilities or take on responsibilities because you think your mortgage payment is going to be a lot lower than it was, then you're going to be in for a rude awakening because now it's going to go back up to where it was supposed to be, to the correct amount. And that's why it's important to understand the overages and under. Another example that I had used in my intro video was a different client who called me back because I have clients call me back from year to year. We check on escrow accounts together and we take a look at different statements and things that they get in the mail if they have any questions. And her payment overall had dropped, but it had dropped overall because she had her taxes had dropped significantly. But her insurance had gone up. So the net effect was an overall reduction, which she was happy with, and she didn't think to ask. But I asked her if she knew why her taxes or why her overall escrow payment dropped, and she wasn't sure. So I had her send over all the paperwork, and that's when we discovered that she could have even saved more money because she could go out and shop for cheaper insurance because her insurance had actually gone up. And she did that after the fact. Everything was prorated, and her payment had dropped even lower. So going into the future, keeping an eye out on both of those bills before they're due gives you the flexibility of being able to maintain the account and making sure that if there's a problem or something that needs to be adjusted, if you're going to need to switch out the insurance or if you're going to need to appeal the taxes, then you have enough time to do it before money exchanges hands, and then you're looking at having to backpedal to get everything fixed up. So we kind of mentioned how to proactively maintain your taxes from year to year as we talked about how that adjustment's going to work. So timing and what to expect, just like we had talked about before. I kind of jumped the gun a little bit on this slide. You're going to have your escrow account uh, evaluated, and you're going to get an escrow statement around March of every year, which is going to tell you what they spent and what they're expecting to spend in the future, where you're going to see your adjustments and know if you're over or under. Your insurance adjustment, of course, which is going to be on the anniversary. So just because your payment adjusted, and that's something to remember too, just because your payment adjusted once in at the end in March of a particular year, and your tax bill hasn't come, not your tax bill, your insurance bill hasn't come due yet, it doesn't mean that the next year you won't have an adjustment just for the insurance. So keep that in mind. Anytime your escrow account goes up or down, you want to be able to know why, because each one of those variables is independent and you want to take care of them separately. You don't want to let one overshadow the other, and then a year later it causes you a problem because you didn't address it the first time around that you had issues with it. All right, and of course it almost looks like a duplicate slide. So in a nutshell, that's really how to maintain. It's pretty simple. Keep an eye out 1 month before your 1 year anniversary for how much your insurance is going to renew to, and keep an eye out in April for a letter from the county that's going to tell you what they think your property is going to be worth in that particular tax year. Because the idea is you want to make sure that your exemptions are accounted for correctly, and that they assess the property as low as possible. They could think the market value is whatever it is. So if for example, if you have a homestead exemption in Texas, particularly Harris County, they could only increase your assessed value no more by 10% 1 year over the other. So hypothetically, if my assessed value is $250,000, it can't go up by any more than 10% so long as I have a homestead exemption. If I don't have my homestead exemption, or I haven't put it on, they could increase it whatever they want. If they think it's worth $300,000 the next year and they believe it may be my investment property, they'll bill me for that. And if I'm not paying attention, then I'm going to be backpedaling, trying to get them to update my value, then ask for a refund, then apply it to the mortgage company while still paying an extra payment or extra money into my escrow account. So it's the best thing to maintain is just know to keep an eye out for those 2 dates. 1 month before the anniversary of your purchase of that property for your insurance, and around March or April for a letter from the county for how much they're going to assess your property and value for that year. What to do if you run into problems? So problems are, for the most part, 90% of the people out there are not really going to run into problems. If they run into a problem, it's typically going to be because they overlooked something or didn't take something into consideration in advance. Okay, but there can be some real problems. So the first thing you need to do is to call your servicer. You're going to call the 800 number on that statement, and you're going to want to talk to somebody if you believe that there is a mistake. Or you're making an adjustment based on you being proactive and paying attention to things out in advance. Sometimes they may have overpaid the taxes, or they have the wrong dollar amount, and you will actually get a copy of your actual tax bill every year. But most people are in the habit of just tossing it. They think it's junk mail. But it's very important to line things up, because you also want to make sure that the mortgage company paid on time. Sometimes things fall through the cracks and they pay late. And if they pay late and there's maybe some kind of penalty assessed, and they try to put that into your escrow, well, then you need to hold them accountable and not let that happen. And that's only going to happen is if you're paying attention to the bill and you're paying attention to when it's paid. Most counties, you could actually log online and take a look at your bill directly and figure out if you're being billed correct, if it's out, what's paid and what's not paid. So if you have a problem that happens with your escrow account and you cannot come to a solution with the mortgage company that you're dealing with, you have a couple of different outs. You can go to the Texas Department of Savings and Mortgage Lending. I'll put links in in the bio to go ahead and show you guys where you can click to file that complaint. You can go to HUD directly and file a complaint with HUD, or you can go to the CFPB. All three agencies have mechanisms in place for people to complain about unfair practices in their escrow accounts. And this is particularly ongoing if there's a problem that happens. A long time ago in Houston, there was a company that was notorious, a mortgage company, a servicer that was notorious for making mistakes and errors and sending people to foreclosure when they didn't need to be. And so it's really important to kind of pay attention. And if you start noticing a pattern of behavior that a mistake that just keeps happening all the time, you're talking to them and they're still making that mistake, it's time to go ahead and think about considering to complain to one of these federal or state agencies in order to have some pressure put on them to make sure they correct these problems. And at the end, you may want to hire or consult an attorney. There's mechanisms in place where you can actually hire an attorney to represent you, and they can actually file suit or deal with your mortgage company directly if there's a problem that is going to require you to file suit against them that they just don't fix. It's better than the alternative, which would be to jeopardize your ownership of your home. Also, there's tax dispute attorneys out there that that you can hire, and what they will do is they'll actually dispute the value of your property with the county to try to keep your taxes low. If you go through the regular mechanisms of value dispute and you still feel like the county isn't being accurate or being fair, there's attorneys that just specialize in that will go through, and if need be, they'll file suit against the county to keep your taxes where they're supposed to be. So it's really important to kind of make sure you know these options. Also, talk to your lender, talk to the person that originated your mortgage. I've been in this business for a really long time, and I always have the door open to my clients where once they run into anything down the road, they could call me at any time, and I could use different levels of my experience to go ahead and point them in the right direction. And sometimes it's something as simple as making one or two phone calls to take care of a problem. So I want to thank everybody for viewing my video. I know the subject matter can be really complicated at times, and so I want to kind of leave the door open. If you have any questions or scenarios or a situation that you want addressed, you can reach out to me by phone or email, and I'll be more than happy to help you guys out. And be on the lookout for more videos from me. Hopefully, I can address. I could teach everybody different things about the mortgage industry to keep you ahead of the curve. Thanks, everybody, and have a great rest of your day.